Hey, everybody. Welcome back to the Real Perspectives podcast. I'm one of your co-hosts today, Vladimir Bosanac, co-founder and publisher of the Registry. I am joined today by my co-host, Evan, from the Pacific Northwest. Evan, say hello. And also, as a quick intro, tell us a bit about, you and your firm.
Yeah, thanks, Vlad. Well, thank you for having me. My name is Evan McLeod. I run a real estate company called Palmero Partners, where our focus is kind of three-pronged: brokerage, consulting, and investments, all things in the RV, manufactured housing, and multifamily world. I'm personally based up in Washington. My roots are from down in California, and so I'm really kind of on a plane, bouncing down and up and down, the West Coast, visiting our projects and doing work.
Wonderful, wonderful. Well, we're going to talk a little bit about your work today because I think it's not very often that we get a chance to speak with somebody that's in this space. So, thank you for joining us and kind of giving us a little bit of an purview into what you do on a daily basis. Before we get started, how are things in the Pacific Northwest? Has the spring arrived yet, or are we still in kind of the doldrums of the rainy season?
I think we're on the back end of it. We had a great month or so ago of some super warm weather. I will say the last week has been a little darker, a little rainier, but no, we're out of the thick of it. The boats are in the water, and it's basically summertime. So we're happy.
That's pretty much all that matters, I think.
Yeah, that's the truth. So
wonderful.
Yeah.
Yeah, I used to live up there, obviously, as some of our listeners and viewers may know, and do like the weather up there. I'm one of these weird kind of weird creatures that likes the rain and that kind of stuff.
Yeah.
But I have to say, probably the nicest summer I think I've ever spent was in the Seattle region. Washington has a lot of nice places where you can spend some long summer nights. So that's very fun.
It's kind of forgotten about. A lot of people don't know how amazing the summers are. And so we love it. It's funny. Every year about May to September, it pulls you back in and reminds you why you live up here. And then it gets a little dark there, December to March or so. And then it pulls you back in. So
agreed.
Yeah.
Wonderful. All right. Well, let's get started here. Evan, so you were going to kick us off here with our first discussion topic. So just as kind of a quick summary for our audience here, we're going to talk about the manufactured housing space a little bit. Then we're going to touch a little bit upon the return to work. There's some news here in California about that as well, which led by Governor Newsom. Then we'll then tackle some of the news around Airbnb and the limitations around that, and kind of what's been transpiring, not just around the country but also around the world with that. And then we'll close off with kind of an investment story around pension funds coming back, maybe full force, kind of into the commercial real estate space again. So Evan, kick us off.
Yeah, absolutely. So, as we mentioned, my world is RV parks and manufactured housing. It's a very kind of niche world. A lot of people don't understand, and I think there's certainly a stigma against that, which I think we'll maybe touch on a little bit. But it's really one of the last true affordable forms of housing, and it's something that I know our governments have been working on trying to solve for years. And I think specifically being on the West Coast, where rents have risen so high, especially in the major markets like a San Francisco, LA, Seattle, where they're, $3,000-$4,000. It's truly one of the last avenues for people to find housing for anywhere from $500 a month up to, maybe $1,000 to $1,200 a month. And, I think there's also an avenue there where, these residents are able to own their home, which is kind of one thing that is not talked about, which is also a true way to, appreciate wealth and whatnot. A lot of people kind of think of those as depreciation and whatnot, but again, it's just kind of one of the last forms of affordability. And I think there certainly is kind of conversations had and articles written about it, which we can get into. And I think also there's just a significant amount of capital being moved into that space for a lot of the business fundamentals that I just shared with you.
Yeah.
And it's what I do from sun up to sundown.
Yeah. I was I have to admit I was not fully aware of it and then about maybe 10 or so years ago, 8 or so years ago, there was a quite a sizable acquisition that Carlisle did here in San Jose, actually,
Yeah.
at a park, and then kind of I think got everybody's attention that now the big institutional folks are looking at this space also. So in the last decade, Evan, how much has that evolved? Have we seen more institutional folks come in? Is it still a mom and pop business? Is it evolving? How quickly?
Yeah. It's significant. I started my career in the multifamily and apartment space, and I bring that up because a significant amount of clients that I've worked with have started investing in the MH world and not just apartments. And so I would say, I started brokerage about 10 years ago, so almost exactly on your timeline. And year over year, there's been more and more and more investments. And again, I think it's because of the affordability. I think that there's also typically stronger returns that investors can find. I kind of phrase it as to people where I feel like we're about 10 to 20 years or even more behind the apartment boom. Apartments have been the cool thing for a very long time. And now manufactured housing and RV parks are, falling into that, and our two kind of buckets of tenants for parks that we own are tenants living for affordability reasons. So local people, blue collar workers. And then there's a growing amount of traveling workers, nurses, construction workers, crane operators, linemen, that are making a really strong income, but would rather have, their home on wheels, so to speak. So yeah, it's a great industry. And what I always tell people with the whole Amazon boom and whatnot is like, there's no app, in my opinion, that can take out the need for affordable housing. Yes, you'll have problems. Yes, you'll have some people not pay rent that comes with it. But in my opinion, I feel like it's one of the more recession-proof product types.
Yeah. Geographically, where are these locations typically, in like a, urban, suburban, area? Where do you see them?
Yeah. So, that's another topic, which I don't even know if we'll have time to get into, is where they're becoming less and less with some development going on in kind of the more immediate metro. But, like Seattle specifically, if you draw a ring 60 minutes from there and really go 20 to 30 minutes out, like away from the big buildings and whatnot, you'll see them quite a bit. You'll see mobile home parks and RV parks spread throughout them. And so I would typically say like 30 to 2 hours is typically a rule of thumb on where these are, where the tenants of those properties are still employed and working in these big cities. I also think like the improvement of transportation is having a huge influence on investment as well. So for example, in Seattle, they have been continuing to grow the train system that going up and down I-5 and the ferry system that's going
Sound
west.
Transit for our audience that is not familiar with that. Yeah.
Yep, exactly. So you have new sound transit stations that are being built north and south. That's giving these employees an ease of commuting into the office, which I think will be another topic we touch on is, people having to go back into the office more and more that have potentially moved out of the city for affordability reasons. And then you certainly have a significant amount of properties further away from cities, but that's one metric I will always look at is like ease of access to cities, transportation, major freeways, things of that nature. Because like I said, a lot of our tenants are traveling workers as well. And so being well located to, for example, I-5 in Sacramento, where we own a few parks, is important because those guys need to be driving up and down that.
What are you seeing in terms of, and I don't know, typically how the, valuations are done on these parks. Is it on a per square foot basis or a per unit basis or, per lot basis, right? How has the pricing changed over the last decade?
Yeah, so the pricing has increased. My family has been in the space 40 plus years, and it's funny, my grandpa and some of my dad and my uncles, they're so used to buying these properties at such a low price. It's hard for some people wrap their heads around it. But going back to your question on the evaluation, so it's fairly similar to like, I'll compare it to a multifamily. The major metrics we typically will look at is price per space or price per pad, similar to a price per unit. So if it's 100 space park, people, and it's a 10,000 per space price, that's a metric they would look at, and then cap rate as well. It's not dissimilar to any other investments where you're looking past the current state of the operations. And I will say, like, this asset class has been as far into the mom and pop world as you could imagine. And what I mean by that is profit and loss statements on a pen and a paper, like all of the above. And so it certainly can be harder to get things done because there's just less systems in it. But I also think that's where the opportunity is, So, but yeah, and then pricing has just changed significantly over the last 5 years, substantially. I think there's been a bit of a reset the last few years with interest rates and some rent control that's been implemented. But, we're still far below an apartment building, for example. You could find something around here for $50,000 per space for a mobile home park, whereas an apartment building may be $250,000 per space. Or per unit, excuse me.
Yeah. And you are active kind of up and down the coast, as you said. Are you, what are some of the kind of, trends that you're noticing in this space in terms of like, amenitizing them? How do communities sort of, see them, what are kind of some things there? Yeah, those are all good questions. I think like amenities are important. I'll start on that. Like, I think just like the common things, laundry facilities, clubhouses. We do have a few pools at our parks down in California. I think that's more location dependent. There's a lot that comes with it: cost, insurance, liability. Wi-Fi is one thing that a lot of people ask for. And then the big thing is the infrastructure. So do you have full hookup spaces? What that means is water, sewer, electric. There's a lot of parks that are partial hookup, which would be water and electric, but not sewer, which makes it harder for a long-term tenant to be there for obvious reasons. You're not connected to sewer. And dog yards are a big one as well. You have more and more people obviously living with their animals, and so that's a big thing. And then, those are probably the biggest amenities. And I think you would ask kind of how it has changed the last 10 years or so. I saw a recent statistic, and I believe 70% of RV parks are still owned by quote unquote mom and pop owners. And I believe the statistic is even larger with manufactured housing. I think it's closer to 80. So wow. By and large, the pool is still owned by the husband and wife that live on site. It's been their retirement for 30 straight years. And so I think the opportunity is still there, and there's a lot more investment coming into the market, which has led to more conversations and some more disgruntled local people, which I see. I also think there's a strong argument against that isn't really portrayed in the media, which I'd be happy to touch on as well. Yeah. Talk about that a little bit.
Yeah, I think that, I'll just walk you through how when an owner comes in and buys a new neglected RV park from a mom and pop owner that has all good intentions and, but got tired, they're wanting to sell. They've been doing it for a very long, and kind of what's truly happening with those parks is the roads are crumbling, the laundry facilities are broken, the lighting doesn't work, the septic may not be active. And all of those things are there because of years of just decay and neglect. And it's not out of bad intent. It's just, these mom and pop owners can only keep up so far. And I get the frustration on affordability and raising rents and all of it. I understand all of it. I've been a renter for a very long time. I think that the thing that the headlines aren't showing is that our utilities are going up 30% year over year. Our PG&E is going up just as much. Our taxes got doubled. Our insurance last year went up 200%. And so when you look at it from that perspective, it's almost like the public's perception of it is to not raise rent, but be able to absorb those costs, which obviously, if you think about it from that level, is just not realistic. And I like to compare ourselves to like other businesses. Call it a grocery store. Gas, we see what's happening with gas. When the cost of bread goes up, they have to sell it for more. And so I think that that's just the unfortunate side of what's being talked about. And also like what's happening with the transformation of these properties is changing the area. When these investors come in and buy these parks, there's a significant amount of crime, drugs, all of the above. And what they're doing is, improving that, getting rid of some of the negatives there. And it's also increasing the property value of these people's homes. And so, again, I get the concern with affordability and people being on fixed incomes, but obviously I also get the other side where, from a business perspective, you can't absorb costs. We just went through a long process of billing back electricity with our tenants, which we may get into. It can be harder with certain states, which, is what it is. All we want is what is fair. And what I've found with like the majority of tenants, we're doing a significant electrical upgrade right now and recently just started charging electricity to the tenants, is when they see what you're doing and when you have like good intent with it, 99% of people are, on your side. You just have a few people that may feel differently.
Right. Yeah. What kind of strikes me about this is that, when you think about, I live in San Jose, for instance, right? And there's always challenges around, affordability here in Silicon Valley. I don't think that's going to be a story that's ever going to go away. But, there are some developers that are, pushing like, micro units, which quite honestly sounds like a terrible thing to impose on anybody. There have been some efforts around some, small housing. I don't know how you find these little cabins that are kind of built on maybe, city land and things like that. I don't know what types of services they offer, right? So I'm almost kind of, curious, why is what you do not in those conversations more, right? Because, and, correct me if I'm wrong, but it sounds like on a per square foot basis, I think in terms of like, livability, in terms of, amenities, just sort of quality of life and even the ability to maybe, earn some equity. It does sound like a very viable, option, but it's often not in the conversation with sort of affordability. Do you have any sense why that might be?
I don't, to be honest with you. And going back to your small home comment, that's actually something that we're actively looking into at a park we own in the Bay Area, is bringing in these smaller homes. And you basically bring them in, connect them to the utilities, varying square footages. Some could be less than 500 square feet, up to 900 or 1,000 square feet. And you sell it back to the tenant, and it's a way for them to build equity in a home, but also live super affordably. I don't know why it's not being talked about, because it's solving like a significant crisis that, has been tried to be solved for years. Again, I'm not going to say there's maybe not some certain owners out there that have put bad tastes in the mouths of other people. Like, I get it. There is that side of it. But I truly believe it's solving a crisis that's needed. And again, you're improving the area, you're reducing crime, you're increasing the equity of those people's homes. But it's just not written about.
Yep. Yeah. Makes sense. Well, it's an exciting area. We'll keep following it, and I'm, happy that we had you here today to, talk about it. Certainly, we'll, try to shed some more light on it, because it is an interesting kind of thing. I am curious, if it might become kind of a bigger portion of somebody's housing plan, whether it's a new governor in California, which we're going to elect here at the end of the year, or other parts of the country as well. So very, very interesting. Well, one of the topics that I wanted to bring up, and this is the whole discussion around return to work, which has been a hotly debated topic in the commercial real estate industry ever since March of 2020 when we all went home and shut ourselves out from the rest of the world. One of the things that is come up here in California, and the only reason I think is very interesting, because I do think it will make an impact. So the governor of California, Gavin Newsom, signed in January a directive that all government employees in Sacramento and other parts of the state have to be in the office 4 days a week. That becomes effective July 1st. So there's an anticipation that, somewhere around 110,000 people will be, in downtown Sacramento going forward. Great for, I think, local economy, great for the, tourist industry, great for a lot of different things. But I am also curious how this is going to play itself out in other parts of the country. Evan, what are your thoughts on this? Have you been following the whole debate about return to work?
Yeah, I have. I'm obviously up here near Amazon, and so I have many friends who have been given that mandate, and had to go back to the office for, I believe it's 5 days now. What
Yes.
I'm not as privy to is kind of the rules within that and how many hours you need to stay and whatnot. But yeah, it's a serious thing, and I think a lot of people have moved away prior to that mandate. I'm one of them. Like, luckily I, run a few of my own businesses, so I don't have to go into the city. But like, I know a significant amount of people have moved out of the city because they want to
Right.
either be further away from it, affordability, closer to family or whatnot. And I think, what I do like about this, to your point, is like supporting the local businesses. I know that was a big thing Amazon focused on in Seattle during COVID is, the local barber, grocery store, whatever it may be that's surrounding these, large companies, keeping them in business. And not all of them got funding in COVID. And so I believe, if my memory serves me correctly, like that was one thing that Amazon even assisted with the literally like the 5-block radius around the headquarters, is keeping those people in business. And so I'm interested to see how it plays out. I certainly think it's good for the economy. But I'm really interested to kind of see how it plays out with the ones that it's affecting, the employees, when not all companies are mandating it,
100%. And I think, anecdotally, I've also heard that even though there are mandates, the enforcement of those mandates is not necessarily super strict, which is kind of interesting. On the one hand, and again, this is relatively anecdotal, but when I speak to corporate commercial real estate, leaders, so these are folks that are leasing the office space essentially. They don't seem to be concerned about return to office anymore. That seemed to be kind of like a topic that's just kind of gone from their strategy decks, or they're more focused on sort of how the space is being used when people are there, and how it sort of conveys sort of the culture and helps them become better at whatever they do. But they don't necessarily think of it as, you have to do this work inside these 4 or 5 walls effectively, right? And so I think there's still a bit of a disconnect in terms of what the end user is doing and how they're thinking compared to what maybe the industry thinks or wants things to be done. Again, this comes from our reporting and just kind of seeing some numbers in terms of research and that kind of stuff. I do think it's super helpful for the downtowns and urban centers that have really suffered during this time. Some of the numbers that we get from, for instance, Downtown Seattle Association, some of the numbers that we get, I think the hotel occupancy is back close to 2019 numbers, or even maybe surpassed it. The number of tourists, I don't think daily sort of office visits are still there, but I think things like this will help spur, I think, like the mom and pop sandwich shops, coffee shops, right? Small retail, even formula retail, right? And certainly, you're starting to see leasing, definitely in the cities where, you and I are, right? I mean, around the Bay Area and San Francisco, leasing is really picked up. In Seattle, Bellevue has done really, really well in terms of leasing, but now Seattle's picking up. Latest stories as both Apple and Anthropic are looking to grow their space in Seattle. That's great news for the city, right? I think in Sacramento, you're definitely going to see a revitalization of that core. All right, so
yeah, I think it'll be interesting to kind of keep our eye on it, And again, I think as time progresses, I don't know those conversations that go on internally with those thousands of employees that are being told to go back, and to your point, like I've also heard that, maybe the rules within that aren't as strict as it may seem on the headlines, so they may only need to go for 4 or 5 hours in a day, and that kind of checks the box. But I'm certainly in agreement that it's going to have a huge impact on like local businesses downtown, which it needs. I think like the Bay Area, Seattle are at the top of that list. But it's going to be interesting to kind of see how it progresses.
Yeah, and I still, and I'm a big believer in offering flexibility. I think there are people that are caretakers, that are people that need to go pick up kids at the end of the day, that kind of stuff, right? In most cases, it falls on the mothers, for instance, right? So I think there's a bit of a gender bias in this case. So I do hope that flexibility still is there for those that need it, while at the same time helping kind of making these decisions for the right reasons, right?
Totally.
Anyway, so. Good. All right. So our next topic is about Airbnb. So kick us off here in terms of what you're seeing, and maybe this is not specific to Airbnb, but sort of short-term rental space in general. I shouldn't call out Airbnb, but they're certainly one of the biggest players in that space.
Yeah, I think it's been a topic a lot over the last couple years. Is just kind of the tightening legislation and restrictions on short-term rentals, and from what I've seen, more specifically in like coastal markets. So we're both from California. I'm actually from specifically Carmel, which has been affected by this, where the downtown Carmel by the Sea now has I believe it's a 30-day plus rule. There are few properties that are grandfathered in, but it's had a significant impact on local people's ability to rent their homes, and again, I understand it. It's to support the local hotels and whatnot. And I think the thought is to protect it from larger companies come in and buying all these as investment properties, which I think maybe grade a little bit to where these larger investment companies are buying, portfolios of homes for longer term rentals. But I see the other side of it where, there's local husband and wives that have built up their life savings to buy a home to rent out as an investment, and they can't do that anymore. So, it's a significant conversation going on in our parts of the world. It's definitely helping, boutique hotels, I feel like, have like a new surge in these markets. But I think depending on who you talk to, there's varying opinions on it. That's for sure.
Yeah, it does seem like restricting short-term rentals comes across as a blunt tool, not necessarily, used appropriately for the end goals that maybe these people are, supporting. If the support is towards housing and making housing more available for more people, if the goal is perhaps to somehow protect the hotel industry. Maybe there are better ways to, do that just sort of, cut this thing off. I'm with you 100%. I have a, close family member in, Croatia, of all places, where my family is from. This is part of their, retirement. They have, they spent their, working years, building up a couple of these, places, one inside the family home and one kind of little, cottage next door to it. And, it's a source of income for them, and has, benefited the local economy. It's a small village where they have this thing, right? It helps the, local economy, brings tourists in. There's a lot of positive things. And I do feel like, like you said, I think in one of our conversations about this, that, there is some fears that maybe some institutional folks are coming in and maybe, doing this. It doesn't seem like that's a problem, I at least from what we've seen. Maybe there are some markets where that's happening, but I certainly haven't seen it as kind of a, trend that we should, be concerned about deeply.
Yeah. That's kind of the last thing I was going to say is I just hope it's being looked at city by city or county by county. And I don't know if that's happening because, again, I do think the thoughts behind it are these big corporations are coming in and buying up. And at least from what I've seen in, my hometown, I don't see that to be the case, So I hope that whoever is kind of making these decisions and voting in each area is like looking past the narrative of that. Because I don't know if, I think most people would agree with that. If these large companies are coming in and buying up everything and there's no more homes for people to live in, like that would be problematic. But I don't think that's true everywhere. Yeah, it'll be interesting. It's a kind of a live thing going on. And I think it'll be interesting to follow it along and see how it progresses. But it's, my family personally, we own a handful of short-term rentals, and it just influences kind of decisions that people are making nowadays.
Yeah, and like I said, in other parts of Europe, we have seen some backlash. I think in Spain and Germany, and I think in France and some places also. So I feel like there's a bit of a kind of like trend around opposing them. But again, I'm not necessarily certain that at the end of the day they're being opposed for the right reasons. I understand that there are some issues around housing and affordability and that kind of thing, not just in this country but in other countries too. But at the same time, this is private property. I think at some level we should be able to use that property in which way we feel most inclined to use it, right?
Yeah.
Not necessarily mandated how it's going to be used, right? I think that's sort of one of the tenets of our system, right? So I do hope that maybe if there is some more regulation, if there's a way to maybe tax these properties in a certain way where it's equal to what hotels are doing. That makes a lot of sense. I also feel that, to be perfectly honest, from my perspective, I don't necessarily think it's the same audience that's looking at hotels and looking at Airbnbs. I think it's a slightly different demographic, and there might be some overlap, of course. But I think there are also certain homes that are so ultra luxury, you just don't have a hotel that can offer some of these amenities. For instance, that like a home in a certain location can offer, right? It just is how it is, right?
Yeah.
So I do hope that at the end of the day we come down to a more realistic sort of view of this, and maybe if there is regulation, focus it towards things that make sense and not just sort of bluntly cutting people's sources of income, right?
Yeah, and you would imagine like if there are locals that live there and they don't want a rental next door, like the restrictions on noise ordinances and cars on the street, like you would imagine there's still ways to keep your neighborhood as it was before whilst not having to go to this extreme. So it'll be interesting, and I don't follow along as much on the eastern side of the US. But specifically California, it's a big topic right now.
Yep, definitely. Well, our final discussion topic here is around some of the pension funds that have been, traditionally invested in the commercial real estate space. There was certainly a pullback or a reconsideration, I think, of that in the last few years. It does seem, from some of the reporting that we've done, that recently, the money's starting to flow back into the investment management coffers. Some of the allocations might be slightly different, so maybe less into office, but more into industrial, more into data center, multifamily. Evan, have you heard the same? What are you seeing?
Yeah, definitely. I feel like when COVID hit and the market was in a challenging and new spot, everyone kind of put their pencils down, and there were years of just the investments weren't happening. The groups that typically spend money weren't. And so I'm absolutely seeing an increase of that. And I think your comment on industrial and like data centers is real, even in Washington and the eastern side of the state, like electricity's cheaper out there. So more things are being built out there, like a data center or things of that nature. And industrial makes sense, obviously, with, the ease of clicking a button and ordering something on Amazon and these new warehouses and facilities to store those things. I mean, I go down to Sacramento twice a month, and it's crazy to fly in there and you see all of these new industrial buildings being built around the airport that were never there before. And so it just amazes you the amount that's being built. And I think there's maybe been a little shift in where money's being spent. I hope that office is getting back to a better place, excuse me. And I think the work from home being lifted may help that. But I'm absolutely seeing quite a bit of more money coming back into the space.
Yeah. What's interesting about that also, just from what we've seen in a few examples, that it seems to be sort of the same people. So even if an investment manager, let's say, had to lose a property or two, they seem to be able to, again, go back and raise the funds and are going maybe after somebody else's, distressed property, which is kind of interesting. But the players haven't really changed. The allocations maybe have changed a little bit, but certainly the industry seems to be kind of, resurging again here in 26, which I think is great for all of us. But anyway, one of the observations that we're starting to see.
Mm-hmm.
All right. Well, for our kind of final close of our conversation here, we have something called telescope, microscope, where we either look at something really, really closely or take a very kind of long view, sort of large lens, 30,000 view of a certain topic. Evan, why don't you start us off here on this last segment?
Yeah, I think one thing that's been kind of front of mind is just solar and energy and electricity and all things under that world. I'll keep it kind of to what's super prevalent to myself is our assets in California and in the increased cost of electricity. It's something that it's made us have to make a change in our business or else you can't absorb it, and it kind of goes back to that first comment we made in the manufactured housing space and trying to make the business fundamentals work. But that's one thing I'm always looking at when looking at acquiring a new property is the electricity. It's one of our largest bills that we have, and it's only continuing to increase. And so more on the solar front, one of our parks specifically would work well with that, is you can come in and invest a couple $1 million in solar and reduce your bill by whatever it may be, 70, 80, 90%, and save a ton of money, in that area. And then the other side of it would be just the ability to charge back tenants the electricity. So I think there's certain cases where that works. I think long-term tenancy, that works really well. Shorter term tenancy where it's an overnight resort, so to speak, you can still do it, but it's a little more challenging. And then there's just nuances to it. You can rent, you can buy, there's significant investments. It's not $100,000 to put this the solar that you see on a lot of homes in California now, for example. But it's something that you're having to navigate and do given the increased cost of doing business, So it is front of mind for sure. It's something I'm learning as much as possible. And I think a lot of people are as well, to continue to do business.
And safe to say, Evan, further into the future, you will probably be deploying more solar, not less solar, right? I mean, this will be probably, if I'm reading what you're saying correctly, this is the direction that not just your industry is going, but energy 100%. Sort of production, right?
Yeah, I think given how large of an expense it is for us and just the trend of how it's increasing, I think the three largest things for us are payroll, electricity, and then insurance is one thing that is side by side with our electricity bill as far as increasing year over year. So absolutely, any property we own or would look to acquire, if they don't already have some recapture of utilities, and it's not just electricity, but for the purpose of this electricity, I would look into how to do that, whether it be via charging back the tenants with meters or implementing solar. But there's just, again, certain rules that you have to kind of abide by and tax implications and you can't sell for X amount of years. And so it's not just a blanket easy thing to do, but it's needed. You have to do it.
Yeah. And it sounds like there's some regulatory changes that need to be done as well.
Absolutely. Yeah.
Based on your experience.
Yep. That's probably another hour convo that we could have, but that's another high topic point, specifically in California. And again,
Yeah.
all we're looking for is what's fair, and it's challenging when your expenses tend to increase higher than you can increase your revenue. We'll just leave it at that.
We'll keep following this for sure, and maybe we'll bring it up for another hour conversation just on the solar. Mine is a little more lighthearted. I have been, following the trend of pickleball. Certainly on the West Coast, it's a big sport. There's been a lot of new pickleball facilities opening up and down the coast. Evan, have we reached peak pickleball? I think so, but you tell me. What are you seeing?
Yeah, look, I love pickleball. I play it as much as I can. I played it last weekend. It seems like more and more and more is being built. I am all on board with it and the path that it's going. I certainly think there's concerns with like when is it too many facilities? We have a court down the street from our house, and it's been there for probably 50 years, and we went and played it and had a blast. And so I'm definitely on the pickleball wave as far as enjoying it, getting out, and it's a great way to kind of get fresh air and it not be too big of a workout. But I think it is interesting how much is being built. I've personally been called by more and more investment groups that are building in like a Phoenix area, for example. So it makes you scratch your head a little bit, which is because
that should be our first warning flag, right?
Yeah. And it's the fun thing. And people believe in it, which is part of like the concern for me, right? Is like if someone has disposable income and want to invest in a wave that is accurate and it's happening, and I believe it is here to stay, but it certainly makes you a little bit concerned, not knowing like, is that 10th facility in the major metro too many, So it's definitely the new thing.
Yeah, and I think pickleball, facilities, have the same issue as probably, movie theaters, right? You're trying to increase the occupancy. You're trying to get those butts in seats, or you're trying to get, those feet on the court, whatever the appropriate metaphor is, right? For, this one, as much as possible. And I do think we could be reaching a point where in certain markets there's just too many of these places that are popping up. I think probably one of the biggest sort of telltale signs of this is how much it costs to rent a court or rent the entire facility, for that matter, right? We have noticed that in some cases it's not that much. And I think it's probably because there's just too much competition. And at this point, they are trying to kind of chase the same dollar, the same kind of corporate event, the same kind of league, right? And it is a growing sport. I think a lot of people are having a lot of fun with it. But I think we might be in for a bit of an awakening in terms of like how many of these places are really going to be, necessary. That's my kind of early prediction on this.
Yeah, and I think a lot of it, like, owners and local municipalities are trying to work on like reconfiguring these big box retail that maybe don't have tenants in it anymore. So like I agree with all of that. Like we need to figure out new ways for them to be used. But yeah, it's interesting, and I'm certainly watching from the sidelines to kind of see what happens. Because again, I don't think the sport is going anywhere. It's super fun. I love it. Our 3 or 5-year-old nieces and nephews can play it, but you certainly wonder when is too much as far as it being built.
That's right. All right. Well, we've come to an end of our conversation here. Evan, this was great. Thank you so much for taking the time to chat with me. Enjoyed co-hosting this podcast with you, and we'll be back in a few weeks again for our next edition. Until then, stay tuned, and thanks for joining us.
Thank you, Vlad. Appreciate it.